A quiet but persistent worry is spreading through the halls of power in Washington. Behind closed doors, lawmakers and advisors exchange uneasy glances, aware that something fundamental is shifting beneath their feet. For decades, the US dollar has been the world's primary currency, granting America immense economic and political power. This status has allowed the United States to set the rules of global finance and enjoy privileges that few other nations possess. But now, that dominance is fading. The once unchallenged supremacy of the dollar is being questioned in ways not seen for generations. Policymakers are watching as countries seek alternatives, eroding a system that has defined the post-war world. The global financial landscape is shifting, and the old certainties are slipping away. The dollar's status lets the US borrow cheaply, fund its government, and wield global influence, especially through economic sanctions. It's a tool that has shaped international relations and underpinned America's leadership for decades. If that role shrinks, so does America's ability to shape world events without force. The loss of financial leverage could mean fewer options for diplomacy and a greater reliance on hard power. The question is no longer if the dollar's power will decline, but how fast and with what consequences. The timeline is uncertain, but the direction is clear, and the stakes are enormous. This shift is driven by deliberate actions from other nations wary of relying on a currency controlled by Washington. They are seeking greater independence and protection from US policy swings. Countries like China and Brazil are building new financial systems and trade agreements that bypass the dollar. These efforts are accelerating, creating new networks and alliances that challenge the old order. This is the most significant challenge to American economic leadership in nearly a century. The foundations laid at Bretton Woods are being tested as never before. The conversation in Washington is shifting from theory to urgent policy debates. Lawmakers are scrambling to understand the risks and craft responses before it's too late. Can the US restore confidence in the dollar, or must it prepare for a new era of shared financial power? The answers will shape not just America's future, but the world's. The stakes are high. A weaker dollar could mean a lower standard of living for Americans and a diminished global role. Everyday life, from the cost of groceries to the ability to travel, could be affected. The evidence of change is mounting, and the whispers of worry are growing louder. Each new headline adds to the sense of urgency and unease. The world is watching to see how America will respond. Allies and rivals alike are waiting for signals from Washington. The outcome will shape not just US fortunes, but the global order itself. The balance of power is in flux, and the next moves will be critical. The era of unquestioned dollar supremacy is under threat. The world is preparing for a future where financial power is more widely distributed. Washington's anxiety is rooted in real, tangible risks. The consequences of inaction could be severe, both at home and abroad. The time for complacency is over. America faces a defining moment, one that will require vision, adaptability, and resolve. To truly understand the dramatic changes unfolding today, we must first look back at the remarkable journey of how the dollar became the world's most powerful currency. In 1944, at the historic Bretton Woods Conference, world leaders gathered and made a pivotal decision. The US dollar would become the anchor of the global financial system, its value firmly pegged to gold. For decades after, countries around the world held dollars as their main reserve, placing immense trust in its stability and value. Even after the US ended the gold standard in 1971, breaking the direct link to gold, the dollar's dominance not only survived, it thrived. Oil and most global trade continued to be priced in dollars, ensuring a constant worldwide demand for the currency. This so-called exorbitant privilege allowed America to buy goods from around the world simply by printing more dollars, and to run large deficits without facing the usual economic consequences that other countries would. The dollar's enduring strength fueled a higher standard of living for Americans, while also giving Washington immense geopolitical power and influence on the world stage. The US could track and control global financial flows, using privileged access to the dollar as a powerful tool of foreign policy and international leverage. For years, there was no real alternative. The world's economies and financial systems were deeply tied to the dollar, making it the backbone of global finance. But now, that long-standing order is being challenged as never before. The foundations of dollar dominance, once thought unshakable, are beginning to show cracks. The world is starting to move on, exploring new options and alternatives to the dollar. The post-war system that so clearly favored the US is now showing its age, and its limitations are becoming more apparent. The next chapter in global finance is being written right now, with new players and new rules emerging. The dollar's reign, once seemingly eternal, is no longer guaranteed, and the world is watching what comes next. Recent trends show that the world of global finance is undergoing a profound transformation, one that is reshaping the very foundations of international trade and investment. There is now a clear and accelerating shift away from the US dollar as the world's dominant reserve currency. Central banks across the globe are steadily reducing the share of dollars in their reserves, with the percentage dropping from over 70% to below 60% in just 2 decades, a significant change in a relatively short period. To manage risk and increase flexibility, countries are diversifying into other major currencies like the euro, the Japanese yen, and especially the Chinese yuan, which is gaining influence at a rapid pace. Major holders, such as China and Japan, are now selling off portions of their US government debt, signaling growing doubts about America's long-term fiscal stability and the reliability of its financial policies. This trend puts upward pressure on US interest rates, making borrowing more expensive for both the government and private sector, and potentially slowing economic growth. The rise of the Chinese yuan is central to this unfolding story, as China's economic power continues to expand and its currency becomes more widely used in global transactions. China, along with the BRICS nations, is actively building alternative financial systems outside the dollar's reach, settling more and more international trade in local currencies to reduce dependence on the US dollar. This isn't a conspiracy or a sudden move. It's a rational and strategic response to a rapidly changing world order. Countries are seeking greater economic sovereignty and protection from the risks of US sanctions and unpredictable policy swings, aiming to safeguard their own interests. The move toward a multi-currency world is a natural evolution, reflecting the spread of economic power and influence across different regions. The era of unquestioned dollar supremacy is gradually coming to an end, as history shows that no currency remains dominant forever. A more complex, multipolar financial landscape is emerging, with new players and new rules shaping the future. The dollar's decline is gradual, but the signs are unmistakable and becoming more apparent with each passing year. Around the globe, nations are preparing for a new financial order, one that promises both challenges and opportunities. The United States must adapt to these changes or risk losing its financial edge and global influence in the years ahead. The global balance is shifting, and the future of finance will be defined by those who can navigate these shifting sands. The shift away from the dollar is now visible in real-world actions. Indonesia recently issued bonds in Chinese yuan, tapping new capital and signaling closer ties with China. Across Asia, more trade and finance are happening without the dollar. The issuance of dollar-denominated bonds by foreign governments is declining, replaced by borrowing in other currencies. The rise of dim sum bonds, yuan-denominated bonds issued outside China, shows growing appetite for alternatives. Major financial hubs like Hong Kong and London are embracing these new markets. Russia and China have nearly eliminated the dollar from their bilateral trade. India is buying oil from the UAE in rupees. Saudi Arabia is considering pricing some oil sales in non-dollar currencies. Each move may seem small, but together, they signal a fundamental rewiring of global finance. The world is diversifying, and the dollar's grip is loosening. Ironically, US policies have fueled the global push for de-dollarization, often in unexpected ways. Aggressive sanctions and tariffs have made even close allies increasingly wary of relying on the dollar for international trade. The weaponization of the dollar, such as freezing Russia's reserves, sent shockwaves throughout the world's financial system. Many countries now see dollar dependence as a growing national security risk, prompting new strategies. The EU is working to boost the euro's global role, seeking greater independence from Washington's financial decisions. Every time the US flexes its financial muscle, it gives other nations a reason to seek alternatives to the dollar. The very tool that demonstrates the dollar's power is now slowly eroding its own foundation. America's financial leverage is increasingly becoming a double-edged sword for its own interests. At the center of this shift is China. Beijing is methodically building the yuan's global role, not by replacing the dollar overnight, but by weaving it into global trade. China's currency swap agreements with dozens of countries make trading in yuan easier and reduce reliance on the dollar. The Belt and Road Initiative deepens financial ties, with loans and trade increasingly denominated in yuan. As more countries join China's economic sphere, their dependence on the dollar fades. The yuan's share of global payments is rising, now the fourth most used currency worldwide. More trade and bonds are being settled in yuan. China is carefully opening its markets to attract foreign investors. This quiet, persistent rise is reshaping the global balance of power. The yuan is no longer a minor player. Internal threats to the dollar are quietly but steadily mounting, casting a shadow over the nation's financial future. America's national debt now exceeds its entire annual economic output, a milestone that signals deepening fiscal challenges. Rising interest rates have made debt payments one of the largest federal expenses, crowding out other crucial priorities and investments. The Federal Reserve faces mounting pressure to keep rates low, risking inflation and eroding global confidence in the dollar's stability. If the Fed loses independence and prints money to finance deficits, the risk of hyperinflation grows dramatically. The US isn't there yet, but the current trajectory is increasingly worrying for many experts. Fiscal dominance, where debt dictates monetary policy, threatens the dollar from within, undermining its long-term strength. The combination of massive debt and rising costs is simply unsustainable for any nation. America's economic vulnerability is real, and it cannot be ignored any longer. The world is watching closely for signs of fiscal discipline and responsible leadership. The world is at a financial crossroads. The dollar's dominance faces its most serious challenge in 80 years. Confidence is shifting toward a more diversified, multipolar system. The risks for the US are profound: higher borrowing costs, a lower standard of living, and diminished global influence. The dollar-based system, for all its flaws, has provided stability for global trade. No single currency is ready to replace it, but fragmentation is likely. The US can still restore faith in the dollar if it tackles debt, adopts prudent policies, and rebuilds trust. The future is uncertain, but the dollar's undisputed reign is over. The coming years will determine if America adapts or accepts a diminished role. The stakes are global. The next chapter in world finance is about to be written. The world is watching and waiting.